Although it gets touted as easy money, most passive income streams are the result of hard work, building an audience, optimizing paid ads, and delivering a great experience and superior product. However, as a current or aspiring business owner, you're not afraid to put in the time to do all those things. Adding passive income streams to your existing business can create a revenue source with markedly different underlying economics. Typically, these income streams will have higher profit margins and can scale more easily than services or physical products, giving you more flexibility overall in your business. Today, I am going to show you 5 legit ways to make money and passive income online. Before the start of the video, make sure to leave a like, and if you want to see more content, subscribe to the channel. Let's get started. 5. Dividend stocks. Shareholders in companies with dividend-yielding stocks receive a payment at regular intervals from the company. Companies pay cash dividends on a quarterly basis out of their profits, and all you need to do is own the stock. Dividends are paid per share of stock, so the more shares you own, the higher your payout. Since the income from the stocks isn't related to any activity other than the initial financial investment, owning dividend-yielding stocks can be one of the most passive forms of making money. The money will simply be deposited in your brokerage account. For example, companies issuing a very high dividend may not be able to sustain it. Graves warns that too many novices jump into the market without thoroughly investigating the company issuing the stock. You've got to investigate each company's website and be comfortable with their financial statements, Graves said. You should spend 2 to 3 weeks investigating each company. That said, there are ways to invest in dividend-yielding stocks without spending a huge amount of time evaluating companies. Graves advises going with exchange trade funds, or ETFs. ETFs are investment funds that hold assets such as stocks, commodities, and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, it doesn't affect the ETF's price or dividend too much. Here are some of the ETFs to choose from. ETFs are an ideal choice for novices because they are easy to understand, highly liquid, inexpensive, and have far better potential returns because of far lower costs than mutual funds, Graves said. Another key risk is that stocks or ETFs can move down significantly in short periods of time, especially during times of uncertainty, as in 2020 when the coronavirus crisis shocked financial markets. Economic stress can also cause some companies to cut their dividends entirely, while diversified funds may feel less of a pinch. Compare your investing options with Bankrate's brokerage reviews. If you are enjoying this video, leave a comment below. 4. Create an app. Creating an app could be a way to make that upfront investment of time and then reap the reward over time. Your app might be a game, or one that helps mobile users perform some hard-to-do function. Once your app is public, users download it and you can generate income. An app has huge upside if you can design something that catches the fancy of your audience. You'll have to consider how best to generate sales from your app. For example, you might run in-app ads or otherwise have users pay a nominal fee for downloading the app. If your app gains popularity or you receive feedback, you'll likely need to add incremental features to keep the app relevant and popular. The biggest risk here is probably that you use your time unprofitably. If you commit little or no money to the project, or money that you would have spent anyway, for example on hardware, you have little financial downside here. However, it's a crowded market, and truly successful apps must offer a compelling value or experience to users. You'll also want to make sure that if your app collects any data, that it's in compliance with privacy laws, which differ across the globe. The popularity of apps can be short-lived too, meaning your cash flow could dry up a lot faster than you expected. 3. Create a blog or YouTube channel. Are you an expert on travel to Thailand? A maven of Minecraft? A sultan of swing dancing? Take your passion for a subject and turn it into a blog or a YouTube channel using ads or sponsors to generate your income. Find a popular subject, even a small niche, and become an expert on it. At first, you'll have to build out a suite of content and draw an audience, but it can create a steady income stream over time as you become known for your engaging content. You can leverage a fee or very low-cost platform, then use your great content to build a following. The more unique your voice or area of interest, the better for you to become the person to follow. Then draw sponsors to you. You'll have to build out content at the start and then create ongoing content, which can take time. And you'll need to be really passionate about the product, since that can help you maintain the motivation to continue, especially at the start as your followers are still finding you. The real downside here is that you can outlay a bunch of your time and resources with little to show for it if there's limited interest in your subject or niche. Your area of expertise may be too niche to really draw a profitable audience, but you won't be sure of that until you experiment. If you are enjoying this video, leave us a comment below. 2. Sell designs online. If you have design skills, you may be able to turn them into a moneymaker by selling items with your printed designs on them. Businesses such as Cafe Press and Zazzle allow you to sell items such as t-shirts, hats, mugs, and more with your own designs. You can start with your own designs and see what the market is interested in, and expand from there. You may be able to capitalize on surging interest in a current event and design a shirt that captures the spirit of the times, or at least a snarky take on it. And you can also set up your own web storefront through a site such as Shopify to market your goodies. Printing partners allow you to ship items without directly investing in the merchandise yourself, avoiding one of the biggest risks of tying up your capital. But you may be able to get better pricing if you invest in some of the inventory yourself. Another big risk here is that you could invest a lot of time with little payoff, but this avenue might be interesting if you're already doing the design work for another purpose, such as personal interest. 1. REITs. A REIT is a real estate investment trust, which is a fancy name for a company that owns and manages real estate. REITs have a special legal structure so that they pay little or no corporate income tax if they pass along most of their income to shareholders. You can purchase REITs on the stock market just like any other company or dividend stock. You'll earn whatever the REIT pays out as a dividend, and the best REITs have a record of increasing their dividends on an annual basis, so you could have a growing stream of dividends over time. Like dividend stocks, individual REITs can be more risky than owning an ETF consisting of dozens of REIT stocks. A fund provides immediate diversification and is usually a lot safer than buying individual stocks, and you'll still get a nice payout. Just like dividend stocks, you'll have to be able to pick the good REITs, and that means you'll need to analyze each of the businesses that you might buy, a time-consuming process. And while it's a passive activity, you can lose a lot of money if you don't know what you're doing. Like any stock, the price can fluctuate a lot in the short term. REIT dividends are not protected from tough economic times either. If the REIT doesn't generate enough income, it will likely have to cut its dividend or eliminate it entirely. So your passive income may get hit just when you want it most. Thanks for watching, guys. If you enjoyed this video, smash that like button, subscribe to the channel, and turn on post notifications to see more of our future videos. With that said, keep enjoying our videos and I'll see you in the next video.